Hello, traders. Cousin Vinny coming to you from theclosingprint.com, Sunday, the 9th of March, 2025. In this edition of your weekend video newsletter, we'll discuss the S&P 500 bouncing back above the 200-day moving average, with volatility being crushed a bit on Friday. At the same time, junk bonds also bounced at the 200-day, but did drop below the 50-day on Wednesday. In summation, leaving us with 6 bullish indicators, 8 neutral, and 6 bearish indicators to start the week. With this in mind, we'll look for this oversold bounce to give us guidance on Monday. A theme that we should look forward to this week is a bounce and a confirmation that the 200-day is going to hold to start on Monday. This with the New York FANG index, as well as the other indices like the S&P 500, which slipped below the 50-day, giving us about an 8% pullback last week, bouncing back above the 200-day moving average after an oversold bounce. Note RSI, MACD, stochastics already starting to turn. So if we can get MACD to turn up and volume to pick up, this should help regain and hold above the 200-day to start the second week of March trading. If we remove the weight of the New York FANG components, we can see that the S&P Equal Weight Index is also above the 200-day moving average, with the number of stocks trading above their 20-day, rising off of an oversold condition, along with the number of stocks above the 50-day. This could give us fuel to push higher as we look for confirmation to start the week. We can also find an area of concern in the Qs, closing right at the 200-day moving average after that oversold bounce. We'd like to see the New York FANG contribute, along with software, semiconductors, cloud, security, and other technology-related sectors bounce, follow through on what started on Friday with the tech sector oversold. So if we can see stochastics and MACD turn and volume pick up, we could see a bounce on Monday. Could be in the operative word. So we need to see confirmation to start the week. With the bounce in the 10-year yield, we also saw small caps deteriorate throughout the week. It looks like these wicks down here are showing where shorts are covering right around 202. If we can manage to get back above 210, we could see this base develop through a bounce and a move back towards the 200-day moving average near 218. As a backdrop, we also need to see breadth continue this improvement that started on Wednesday, followed through into the end of the week, with all of the indices, S&P 500 in the top panel, mid caps, small caps, and NASDAQ in descending order, all turning up from below zero, making higher highs and higher lows. We need to see this follow through in addition to the New York Stock Exchange high-low. Looking for that to get back above the zero line and for advanced decline to turn back up near this trend line. Given this neutral stance, we need to see sectors all turn back up. The only one that looked the weakest last was XLF, financials. The rest looked like they could follow through on the bounce that started on Friday. Some bounced on Thursday, like energy, transports, and biotechs. Finally, if we watch VIX, the front month is pricing in about a 4.1% annualized percentage greater than realized volatility, which means we should see this spike in the 1 month versus the 3 month VIX continue to back off. We hit a high of 117 on Friday and reverted back to right around 103. When it hits the green zone, we're looking for a bounce in the markets. As you can see, looking at the S&P After we hit these spikes, we start to see a short-term bounce. Does it follow through? We won't know until the week plays out and options fill in for the month of March. Bottom line, we're neutral, looking for direction on Monday. The 10-year yield bounced last week. That's putting pressure on small caps. MACD's turning. There's a possibility we continue a bit higher. We'd like to see this roll over or base in this area, which would give bonds a chance to base as well. Looking for TLT to get back above the 200-day moving average, along with a continuation in the US dollar. The result being other currencies are rallying, like the British pound, with the United Kingdom ETFs and stocks rising, as you can see, with EWU moving above its 20 and 50-day moving averages back in the second week of January, with a 20-50-day cross, looking for the EWU and many other European and international ETFs rallying last week. You can see France here following through, along with Italy, Germany, which took off last week, Greece, and Turkey, with the bottom line that many of these countries are trending bullish as we look for a follow-through into the month of March. Finally, we're seeing crude oil products, gasoline, etc. moving lower, which is good for the consumer here in the U.S., despite the backdrop of tariffs in the short term. Bottom line, we're neutral to slightly bullish as commodities and the dollar back off. We just need to see the 10-year yield drop as well to give us more of a bullish bias going into the middle of March. With many stocks oversold, we are looking for a bounce. There are fewer stocks that look like they could bounce and follow through this week. We're looking for the New York Fangs to participate. The stocks down below in the IBD 50 and stocks that I've gleaned from a 20-50-day bull cross are down below. Looking for stocks like Apple, which held up pretty admirably last week despite the market pullback. Looking for these stocks to continue higher. Note RSI is rising. MACD's trying to turn. And price is trying to get back above the 50-day moving average. AAPY, yield premium strategy on Apple. Looking for that to continue if Apple pushes higher this week. Along with other tech industries, in particular semiconductors, ACMR is from that group. Notice the 20-50-day cross back in January. Price action continues to come back to the 20-day and bounce. So we're looking for a follow-through in ACMR out of the IBD 50 this week. Interdigital semiconductors trying to stay above the 20-day. We had a pop on Thursday. We faded back to the 20-day. We'll see if this follows through and MACD changes direction. Volume was above average on Thursday and Friday. In addition, some of the defensive sectors continue to show strength, like TGTX. I know Frano is in this one. Looking for a breakout of this flat base. We got it on Friday. Look for a follow-through. MACD has turned up and volume increased last week, starting on Monday. Z-Lab is back on the IBD 50. It's at the highs of the year. 20-50-day cross back in early February. Looking for the follow-through this week. MACD is rising. Volume is what got my attention. In addition to price action, we look for this to continue higher over the next several weeks. Additional healthcare names like Biogen, Amgen, Johnson & Johnson, Bristol Myers, AbbVie, Abbott Labs, all of those moving higher over the last several weeks. Look for these to continue, along with stocks in the healthcare group, in this case medical supplies, Lantheus Holdings. Nice follow through the last couple of weeks. We'll get a 20-50-day cross most likely this week and a retest of all-time highs. Another healthcare name, BNTC, Bentech Biopharma. Flat base looking for a breakout above 1350 in the short term. RSI rising and MACD is bullish. With the healthcare sector rising along its bullish 20 MA and many stocks in the group following suit. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on Sunday, the 9th of March, 2025. I'll send out a watch list later tonight around 12 midnight on the East Coast and around 9 o'clock on the West Coast, so be sure to check your inbox for that. Just keep in mind we're neutral, looking for confirmation to start the week. Have a great weekend. What's left of it, take care, and we'll see you in the morning. Ciao.